Welcome back to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me live at MarketSite is Dave Weisberger. He's the head of market structure research over ViableMkts. Thank you very much for being back on set with me. It's been a while since we've spoke about our favorite subject, cryptocurrency market structure, and you had a great piece that came out earlier this week, and you're saying that there's a confusion among crypto enthusiasts regarding market structure. Let's talk about that.
Yeah, it's funny. I titled the piece, Are Decentralized Exchanges an Oxymoron? Because there's been a lot of articles about decentralized exchanges, specifically because of the hacks in cryptocurrency exchanges, the last one being over in the Far East. But it is a real issue. The problem is that they're conflating two issues. On the one hand, security, namely where you custody or hold your own wallets, or do you let the exchanges hold your wallets, is a real issue, and you can understand why decentralizing and breaking the exchanges from holding the actual securities makes sense. After all, in equities, DTCC performs that function. And in crypto, right now, the exchanges can, or you can hold it yourself. The problem is that order books, i.e. the ability to see what is a price, is the actual major function of exchanges, and that requires actually centrally displayed order books. Now, centrally doesn't mean one. In equities, we have 13 exchanges, soon to be 14, I think, with a new application coming out. So it doesn't have to be one. And in fact, there's a protocol called OX, which allows people to run order books and have that completely separate from the settlement process. The problem is you can't have a decentralized exchange in the sense of no order book, because then there's no way for buyers and sellers to know where each other are meeting and what their price is.
You brought up something that there's three types of market structure.
Right.
Tell us about those.
Right. So in markets, there are quote-driven markets, there are order-driven markets, and there are auction markets. And all three have places in the ecosystem. We'll start with the easiest, auctions. The auctions on Nasdaq, for example, the opening auction, the closing auction are the two most important liquidity points in the day. It brings all the buyers and sellers to establish prices that get used for various purposes. The close most meaningfully is for the NAV of funds, etc. Also on expiration of options and futures, it provides very deterministic prices. And that's a big word, but what it means is if you want to know that you can sell and pair off against an option that's expiring or a future that's expiring, you can do so with certainty. So auctions are important, and they're also very useful for aggregating liquidity. There's lots of new products coming out. Coda Markets has a block auction. That type of thing allows you to potentially attract people into the market at a point in time. So that's an auction. Gemini runs an auction, and that's what SIBO uses. Not a lot of liquidity in there right now, but that's auctions. Quote-driven markets are what dealers use to attract liquidity, slightly wider spreads, but it allows dealers to effectively say, here is where we're holding ourselves out to make a market. Well, in a quote-driven market, an individual can't post a quote, right? It is the dealer who controls that market. And that sounds bad because we kind of like the idea of individuals being able to interact. But in less liquid markets, the dealer quotes often provide centralized liquidity in the sense of what you can get done. The OTC markets are a great example of this, where there's a lot of dealer-driven liquidity. In less liquid stocks, it works very well. Order-driven markets, what we all know and love, Nasdaq runs multiple exchanges that work that way, are where each individual order represents itself in a order book, either displayed or undisplayed. But the key there is order competition. The orders compete with each other for being at the front of a queue, and they compete with each other to access liquidity when they are aggressive. If you diffuse that, it makes it hard for orders to compete. It's hard to find the price.
Right.
That's the issue.
Well, the other big issue is, and you brought this up in your piece, is manipulation just completely ignored sometimes.
Yes.
Well,
I mean, I'm sorry. I'm sure Michael Ovid is going to freak out when he sees this, but the fact is, when you look at distributed markets like AirSwap, that's one that has raised, I think, north of $30 million in their ICO. It's been promoted heavily on Bloomberg and other assorted things. But you look at it, and it's essentially a mechanism for a market maker and a market taker to negotiate with each other through a process. Well, when I read it, it reminded me very much of my favorite pastime, which is playing poker. Because when you're a taker, there's no penalty for saying, I want to buy, when you actually want to sell. And when you're a maker, it's the same thing. And the independent price indexer that they have in the platform has no skin in the game. There's nothing that forces those guys to be looking at the displayed markets and everything else that's going on. which is interesting because we have a product called CoinRoutes, which our router looks at 28 different exchange markets, displayed markets, and in fact we'll probably be adding several more. There's like 80 or so exchanges. It's a question of which ones you want to add. But if you're not taking into account what you see on GDAX and Gemini and Kraken and all of the others, Bittrex and Binance in the altcoins, you simply don't know where the price is. The question, what is the price of Bitcoin? I'll tell you, we have a product called Real Price, which is at any instant in time what it costs to buy or sell 5 Bitcoin inclusive of fees, and the midpoint of that. That often deviates from services like Crypto Compare or CoinMarketCap. I've seen it deviate by $200.
That adds up.
It's crazy,
yeah.
right? And so, answering that question is important. You need price discovery. In the equity world, we've all heard this many times. We need to bring trading into the light. Nasdaq is obsessive about maximizing displayed liquidity on behalf of your issuers. It matters. Well, the same thing is true in coins, only the decentralized exchanges, for the most part, don't really care about those prices.
Right. Well, what about, let's wrap it up with this. How do these markets evolve?
Well, I mean, look, I'm hoping to be part of the solution. Now, it's a blatant self-interest, so everyone should discount that with the grain of salt that's required. But our product, which is a smart order router that people can distribute, and a research platform which shows all these prices as well as data feeds, is something that we're launching commercially today, tomorrow. It's about to go up on the website. You'll be able to get a free trial to this product very, very soon at coinroutes.com. It's not just us, though. The industry is evolving. There's other places and people in the industry that are really focusing on self-regulation, which hopefully will deal with and work with places like the SEC. I was down in Washington last week, and in fact, talking to the SEC and went through a presentation, and they're very keen to work with the industry. What they don't want to do is choke off innovation, but they also don't want investors to be able to buy something at a price that's radically different than the real price of what's going on.
But that's what's good with platforms like yours coming out. That
Sure.
competition is healthy, and that's
Right.
what leads to better price discovery overall.
Right, and I'm sure there will be others.
And that's how you mature the market, because I feel a lot of people came into the crypto world and they expected it to be on par with where equities and bonds, which were super, super mature markets, which are still evolving, right?
That's right.
So these things have to happen. It's not just an overnight thing where everyone's going to put $1,000 into Bitcoin and now they're billionaires overnight. These things take time.
It's absolutely. And the reality is, so we're building a dark pool. Well, a great example is also in the piece is there's this new dark pool that a 21-year-old evidently founded, raised $30 million for what looks like a really, really cool design. I'm not going to lie. I actually am quite fascinated by it, called Republic Protocol. Now, it raised $30 million to aggregate liquidity as a dark pool. So basically, it's a better version of LiquidNet. The problem is pools like that don't deal with price discovery. Well, we have a coin, an ICO, a SAFT coming out too for what we call Routecoin, which allows pools like that and all of the others to seamlessly routers can seamlessly work with those pools and the displayed markets. So I guess my idea is worth a lot more than $30 million if you consider the size of the markets. Look, I don't know what these things are really worth. What I can tell you is innovations, whether it's ours or several others, people like OX who are trying to do something to make the markets work better, this is what is important and why it's so important for the regulators not to squash innovation, because innovation is what is going to fix this kind of fragmented market.
All right. Well, it sounds like a super exciting time in market structure for crypto for sure. Well, thank you very much, as always, for your insight and expertise.
Thank you for having me.
And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.